Hi everyone, welcome to Search Insider, where we provide you insider advantage to surges in the market. How's everyone doing? So I hope everyone had a great weekend staying at home. I know that the virus is striking everyone's heart. Everyone's staying at home, working from home, and it's been tough, right? And I mean, my girlfriend and I, we were at home and we felt really trapped, right? We couldn't go anywhere particularly. So I kind of understand where all of you guys are coming from. But I think one important thing is we need to be prepared for the week, all right? And we need to be prepared for what is going to be happening in the markets. And so what I'm going to be doing today is, I'm just going to cover through what had happened last week briefly. And also at the same time, we're going to be covering some news. We're going to be covering what exactly is happening in the COVID-19 front line. And we'll be talking about the stock market and also what we need to be ready for this week. All right, so let's begin. So first of all, what's saying right here is actually the economic calendar for this week. I will personally be following, I'm only following these few countries because this is what I've been trading all along for the last, say, 8 years. And so New Zealand dollars, CNY, which is Chinese yen, Canadian dollar, US dollars. Now, one important thing to note in terms of news or economic calendar per se here is which currency are you exactly trading is what you need to be concerned about. And I think one very important point here is that for US dollars on Wednesday, at least this is for my time in GMT +8 in Singapore, well, I'm really looking forward to the ADP non-farm employment change. And also the manufacturing PMI, which is called the producer market index, right? So we need to know exactly what is the manufacturing sector, how has it been affected. It may not be showing this quarter's data or this month's data, so it won't be as accurate. But ADP non-farm employment change will be more accurate, and the forecast is really predicting that it will be a negative 125k. So whatever statistics here that shows in actual data, if it's more negative than that, then we're going to be seeing some downturn in US dollar strength. Of course, we are seeing one important thing here, which is unemployment rate, non-farm employment change as well. So we're going to be seeing some very important data right here on Friday. This is something that you need to pay attention to, all right? Caixin as well, services PMI. So I kind of predict that Caixin PMI and even Chinese non-manufacturing PMI to be negative. Mobility in China is about 70% right now. In fact, when they were in lockdown, it was about 20%. So 70% mobility means the factories are starting up, right? Manufacturing is kicking up, ramping up production again. But we won't be seeing a huge change in the Caixin services yet. Okay, so we'll see what's going to be the figure. All right. Now, one thing that's important to note is I think we need to understand what is happening right now in the COVID-19 frontline, right? Of course, I don't want to dwell on the numbers. I don't want to dwell on the negativity here. But for the actual figure, as we all can see from this, it's actually from Johns Hopkins University. We can see that there's 720,000 total confirmed cases. I think we will hit 1 million by the end of the week. It's a very scary figure. We are multiplying in a very huge exponential rate, very large exponential rate, very quick. In fact, very few countries have it controlled or have it with minimal increase. A lot of people ask as well, when will this likely stop, right? When will the figures stop increasing? It's really hard to say because to me, my point of view is this. The aviation sector, the hospitality sector will be affected. As long as you have 1 to 2 cases, individual isolated cases of COVID-19 somewhere, there is still a chance for community spread. There is still a chance that this virus will be here to stay. And in order for you to control, you can kind of only control in terms of the figures, right? You can only control in terms of social distancing, everyone staying at home. You can only control the increase, slow down the increase. When it reaches a peak, then you start going down. But the question is, when are we exactly heading down? Have we hit the peak of the number of deaths a day? Have we hit the number of cases, total number of cases that we are at in a day, right? So the total number of increase in a day, we don't know, right? So it's so many uncertainty here. And we can see that epicenter has now shifted towards America, North America, right? So we have 140,000 US cases right now as compared to Europe or Italy. So we know that the epicenter now is in America and in Europe, all right? And I sincerely pray and hope for the best for everyone who's out there in the US and Europe. Guys, stay strong. We know that this won't last very long. I'm hopefully seeing that it will end in Q3. There are people that are predicting it will end in May. I personally feel that we will be seeing a slowdown soon, but it may not end so soon, right? In terms of economic downturn, in terms of recession, unemployment, there will be a subsequent repercussion it's going to hit later on, most likely in Q3 or Q4. I personally see that this will carry on all the way to Q3 and Q4. I know I'm in a pessimist kind of point of view, but I think it's important to set the right expectation and then we work towards that, right? We figure out what is next that we can do, okay? So in terms of live update, I think on Bloomberg, this article that I read last night, US death could reach 200,000, right? Spain toll rises. So in this article, you can actually see what had happened all around the world. Cases topped 713,000, 600 people dead. We see some recovery here. US death passed 2,400 with more than 138,000 cases. So a lot of countries are facing a lot of issues here. We can see at different timeline, different countries are making different statements, going into different phases. So it makes you wonder, right? When exactly can this stop? Now, I think what's important to know is what exactly can we be prepared for? All right, how long can this be dragged on? And I think that's what we need to be ready about. Okay. So of course, in the week ahead, this week, with the virus cases going up exponentially, we will be seeing some equity rebound. Despite equity rebound, which happened last week, right, for Dow Jones, we see a bear market and volatility that will continue. We have already seen futures going down. In fact, on Dow Jones, S&P 500, and Nasdaq, we're all going down right now. VIX is heading up. I think the only thing that's kind of like a consolation right now, it's gold and silver. We are still climbing up slightly in terms of commodities. But in terms of oil, you know, per barrel is $20 US. I mean, I've been talking to my friends, right? It's even cheaper than beer now, right? So oil is cheaper than beer. Newsflash, okay? So it's the demand and supply shock that I mentioned last week, right? With low demand, with huge supply, you're just gonna see a huge discrepancy in terms of demand and supply, and therefore crude oil prices will be suppressed heavily, and that will also affect Canadian dollars as well. All right. So if you know about forex, you know what to do. So we do see that Friday stock pullback signals strong investor uncertainty. There is a lot of uncertainty. No investors want to hold on to their trades over the weekend because they cannot sell it. So actually, a lot of investors took profit on Friday, right, to get rid of the uncertainty over the weekends. We can also see economic data will be pouring in. Unemployment claims, okay, jobless claims in the US has reached 3.28 million. It is a new high, definitely, and we've never seen such a figure before, a staggering figure. But the only thing I can say is that for jobless claims as of this month, this is just the beginning. We're going to be seeing more, larger unemployment rates, larger jobless claims in the months to come. It's going to be scary. Figures are going to be pretty much jump up, right, in a huge way. But I think we need to be more resilient, right? We need to think of what to do next. Okay, so this is more than expected that we're going to be hitting a new high. Okay, in terms of jobless claims. So stocks futures fall 2%, pointing to another volatile week. So this week will be a volatile week, guys. In terms of indices, if you're trading them. Of course, in terms of forex, definitely as well. Okay, so we're going to be covering a little bit on the charts very quickly. So so the first sign, okay, of risk off, okay, or investors and traders being scared in the market is USD yen. Now this is a very good indicator. Why? Because yen has always been a safe hedge. All right, it has always been a hedge out of risk in the economy or in the markets, and that's why investors and traders will always flock to yen. So we do see yen heading downwards, and this is on a 4 hours chart. We do see on daily as well that we are heading down. Very significantly, in fact, because we are getting off of USD towards yen. Now, whether or not the strength of yen is welcome in Japan, that's another question, all right? Because the strength of yen is going to it's going to lower exports because of the strength of yen. The key question here is what exactly, in terms of stimulus policy, will Japan be issuing out? And also at the same time, we know that Japan has always been a deflationary economy, right? It has always been that way. So they're running out of stimulus plans. Okay, the question is, what will the third largest economy in the world do during this crisis? I think I've read certain reports that they have issued, stay-home quarantine order. All citizens are reminded to take care of themselves. There's less testing. Testing will cost you money, and only for severe cases will you be tested. And that's what's happening right now in Japan. So fundamentally, even though Japanese yen even in Japan itself, economy may not be doing well, but yet the currency plays a role because of historical records, okay, that it has been a safe haven or a safe hedge for very, very long, for many, many years. And that's why we see it strengthening against the US dollars. All right. Now, of course, Aussie yen would then be a very good proxy to understand what is what's risk on and risk off in the economy. And also because it's one of the first, Australian market is one of the first market to open in the world on every Monday, and that's why it's a good proxy to understand what is risk or how is the risk happening this week. Of course, we'll be looking at Aussie yen. I personally really feel very strongly that we'll be heading downwards because of how the economy is risk off. Okay, the only reason why Aussie dollar is heavily resisted or supported, where the price is actually pushed up in that sense, is because of gold prices. So in terms of commodity, gold is doing quite well, and that's why it's pushing up Aussie dollar. At the same time, but I do personally see that at the end of this week, we might see Aussie yen heading downwards. Okay, this is nothing to do with TA, just basing on fundamental analysis. This is my my estimation and also my observation for Aussie yen. Of course, New Zealand dollar will follow suit, follow the direction in terms of for Aussie dollars, right? So when it hits up, generally we will see the same trend happening for New Zealand dollars. Now, the interesting point here is about gold. I think gold had a very strong week last week. All right, it did fantastically well. Of course, I'm a gold fan. Okay, so other than Bitcoin, I'm of course holding gold as well. So all I'm doing is gold ETFs, guys. I'm not holding on to physical gold because I cannot go out and sell gold nowadays, right? The malls are closed, or they are limiting the number of people that can enter the malls. I don't even know whether my my gold bullion store remains open. So I think, hey, maybe it's better to just hold on to gold ETFs, right? It's a lot easier to liquidate as well. So anyway, we do see gold heading up. I personally do see gold heading up once more. I know it's already at a pretty high situation, but because of the uncertainty in the market, I think it'll continue to go up. It's the end of the liquidity crunch. Okay, this is what my observation tells me, is that in the previous time last week or a few weeks ago, we saw a panic selling for gold, right? So we hit up to a new high of about 1,700 US dollars per ounce. And then we dip all the way to $1,452 per ounce. And a lot of traders suddenly concluded that, hey, gold is no longer a safe haven. But the issue is we need to understand that there was a liquidity crunch, meaning to say people were liquidating everything that's liquid, be it Bitcoin or gold or anything, just to support their margin leverage position with regards to stocks or bonds, anything else, okay, especially equities or even indices or even futures. So that's what they were doing, right? Selling what's liquid, which is like gold and Bitcoin, into the market, getting US dollars, holding on to US dollars, or as a matter of fact, to support their margin leverage position. So in this second wave that's coming right now, this is a fundamental push, meaning to say it's no longer more of a panic push. It's more of a fact that people understand that there's a virus going on. People understand that the economy won't be doing well because of unemployment rate, high unemployment rate, because of high jobless claims. And that's why in terms of gold prices, it will start to head up, because we are not going to be selling more to support any leverage position, because we are taking less leverage position. Not saying traders don't, some traders still do, of course, but less of them are willing to put up more risk for that. And in fact, some investors or traders are holding on to US dollars. But my greatest question here is this. Now, with quantitative easing, with stimulus coming in, with the US Feds, right, approving a 2 trillion, or even the Congress approving a 2 trillion stimulus bill, and we're printing more money at a rate that is so fast that it's very hard for anything else to catch that speed, right? And so with that happening, is it wise to then be holding on to US dollars? Will we be hitting onto hyperinflation state that's going to be happening? And even if you are given US dollars, or even if you are given certain short-term boost, right, the government is giving you money, cash outs, what exactly will you be doing with the cash outs? Will you be spending, retail spending? Will you increase retail spending? Will you be saving for rainy days ahead because you know that we are heading into unemployment? You know that in the next few months we will need that money. A lot of question marks, right? So in fact, what the government wants you to do is that once you're given a cash out or the handout, you're supposed to use it so that it increases consumption. But the problem is during this kind of sentiment, all you want to do is maybe a fraction of people would spend all, a fraction of people will hold on to some and then keep some, spend some. So it's really a very key question here as to what's going to be happening. But my personal gut feel for gold is that we will continue to head up. We might see some downward pressure, okay, some selling. If let's say the indices were to go haywire, it starts heading down drastically, then we might see some liquidity crunch. But personally, this time I don't see gold heading down more than before. All right, so this is my personal observation for gold. Of course, once again for Bitcoin, I think Bitcoin hit down over the weekends. And I think I actually kind of hedged out at about $6,800, thank God. But I think it was a telltale sign of, I was discussing with my friend back in Canada, right? So Eric, if you're watching this, is for you. He was just telling me how, you know, the Dow has been going up for 3 days. It seems a bit risky. And especially for a Bitcoin market, I think it's time to hedge out. And so we were just discussing about it, and both of us did some hedging, and there we go, right? We see the market for Bitcoin heading down. I personally still feel that Bitcoin's price is still pretty much linked or correlated to the indices. As much as I don't want it to be, it still is, okay? And from the chart that we see here in ADX and DI minus, we do see that there's going to be more downside to come. Even more selling pressure will hit Bitcoin. So if you're holding on to Bitcoin, you're holding on to stable coins. In fact, I think you can aim for a lower buy-in. So I personally will be looking at 5,500 or even 5,000 and below. Of course, I hate to be pessimistic about Bitcoin's price, right? But you know, we gotta be ready for it, and anything that's gonna happen will happen. Especially if the indices were to go down drastically, we might experience a heavy downside on Bitcoin, because of how investors want to cash out on liquidity and then to make the next move. Okay, so do be careful of that, and do be careful of heavy sell down. I'm still heavily supporting both Bitcoin and gold. I think these are worthwhile investing into as of now in terms of the climate that's happening in the market. All right. So thank you guys. Once again, disclaimer here, this is non-financial advice. Do speak to financial advisors, and these are just my personal opinion and coming out from my experiences for the last 8 to 9 years. All right, so thank you guys for tuning in. If you like the content, do like, comment, subscribe, tell me, give me some feedback. All right, we're on Telegram, Twitter, Facebook. So I'll catch you guys on the next episode, and take care and safe investing.